Okay, we're here on Peter Dellane's Mortgage Show on episode 3. And Peter, you're going to tell us a little bit today about some real case scenarios that you've dealt with in this last month. It's been pretty successful, huh?
Yeah, Reed, good to hear from you again. We're going to go over a couple scenarios that have just happened within the last video that we did in the last couple weeks, one of which has closed already and one that I believe is going to be closing here shortly. Craig has a lot of the information on the back. And I just want to say, I want to thank you for your feedback on the videos. I'm getting some calls on them. I want to thank the agents we're having one of a spectacular month. You know, we work with awesome agents. I think we make them better by some of the things we do. And we're going to talk about that as we roll over to some of the scenarios. So just want to say thanks again for the business. Craig, tell us a little bit about the first one we talked about. We have a lot of stuff to cover here, so we're going to try to get it all done within a short period of time. So, Craig, tell us a little bit about the first opportunity that we received where the file came over, and I believe it was a turn down. So, go ahead, Craig.
Yeah, we had 2 very good wins this week, at least. Basically, a client was buying a house on the Eastern Shore. That home was an REO, and the existing bank that she was with basically stiffed it to death on the appraisal and property conditions, among several other things. We picked it up, restructured it, ordered a new appraisal, closed in about 11 business days, had it clear to close in 8 business days. So everybody was very happy in that transaction. We have a second one that was just outright declined. Took the app a few days ago. It's now approved. We'll be moving that to closing probably within a week or so. So those are the 2 big wins that we've had recently since our last video.
Okay. You know, what we really offer is clarity and certainty on the transaction. And try to think about the last deal you had as an agent that fell apart. You know, and what was it? Was it a debt ratio appraisal? Another thing too is, you know, were you shocked? Did you lose a deal because of maybe pricing or something like that? And what we bring is, and I keep going back to that thing, is making agents more money per hour, because you're not out showing homes to people that could be looking in a higher approval bracket, and appraisals and debt ratios and how we can restructure a deal. And basically, Craig, are there any other opportunities you talked about here on the sheet that you want to bring up?
Yeah, and I kind of just wanted to kind of wrap that all around into what we do and what we do better than anybody else out there. And just to give you a little bit of my background with Pete and that type of thing. Pete's owned Ability Mortgage Group, I don't know, what, since 2001, is that right, Pete?
Yeah, 2001.
Yeah, I've known him since 2003. There's not many mortgage brokers that have been in existence for that long. What that tells you is he's doing business the way business should be done. He is looking out in the best interest of the clients. Just to give you my background, I came from the banker world, and he was one of my best clients in all areas of how you measure a mortgage broker. And I'll kind of explain what that means to you in a few minutes. Basically, in all categories: volume, quality of loan submissions, pull-through ratios, pricing structures. He was either number 1 or number 2 with me for many, 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 many years. And all that means is,
let me interrupt you real quick. One of the things I want to say is when I'm looking at a loan and structuring it and the credit quality of it, is if there's a default on it, or if any kind of fraud or anything like that, I have to buy that loan back. So the quality of that loan is very important, you know, and that's why I like to have a conversation with everybody to find out, that what's going on with the loan, what the purpose is. But, you know, I'm actually on the hook of that as the broker owner. And go back into that, Craig. I think it's real interesting what you get ready to say.
Yeah, and how this relates to your realtors and your client. I'll touch bases on each one of those, but like I say, Pete started this legacy many, many, many years ago, and we're continuing this today. Number 1, volume. What that means to you is when we pick up the phone and call an investor, or when we ask for a favor, they're inclined to work with us. What quality loan submissions mean is many loan outcomes are based on just what Pete mentioned, are based on how they're presented and structured. That's why we ask for all the documentation we do up front. This is how we can turn declined loans into approved loans, such as the ones we mentioned earlier in our call. the number of touches, for example, by an underwriter profile are some of the lowest in the industry. When we present full, clean files, it keeps underwriters happy and on our side. And this is what we want. We've probably had 10 files in the past, I don't know, couple of weeks where the underwriter took the time to either email or call and thank us for such a nice file. For an underwriter to take the time out of their day to do that is very, very, very rare. And I know this because I'm married to one. So I know that's rare. So
you're married to an underwriter and I'm married to a realtor. So
so
go ahead.
On pull-through ratios, what we talked about before, this means the relationship of loans submitted versus funded. Our numbers are somewhere north of 90% of all loans that we take in close and fund. And I'd have to check current numbers, but industry standards have been in the 50 to 60% range. And what that means is people are throwing up everything up against the wall and see if it sticks. And that is not what we do. We don't do that.
Locks. Let me interrupt. It's 50% of locks. Think about that, or 60% of locks close. That's an industry standard that 50 to 60% of the actual of a lock actually closes. Ours, I think my overall was like 87% pull through. If we lock a loan, we're basically, joke about it, you're going to prom. I mean, unless something came up that, you know, that maybe a change in job or something like that. But industry standard is really low. I've kept it as high as I could. And by doing that, I think we have an investor, Craig, this week, an investor meeting a bank that said, we're going to give you 65 basis points. I don't know if we could put that in English for our viewers, but 65 basis points better in pricing based on our pull-through and quality of our loans. Craig, try to explain that.
Yeah, basically how that all comes into play.
Go ahead, Craig.
Yeah, being a quality business partner with the lenders out there, that means when they offer special pricing incentives, they are coming to us to do that. So to back up through on the pull-through type of thing, just like Pete was saying, the only fallout we normally have is like for home inspections and something that are completely unrelated to the mortgage lending process. But the other companies out there that just throw everything up against the wall to see if it sticks, they've got a seller that's under contract, a buyer that's under contract. You've got at least a couple realtors that are involved with that. They're paying for inspections, paying for appraisals, and then all of a sudden the loan falls apart and they're not able to do the loan. So it doesn't do anybody any favors to throw up everything against the wall to see if it sticks. But that price structure that he was just talking about, you know, a part of that is we keep our overhead low. We don't pay the separate loan officer commissions. We are the broker and we shop for the best deal for you. But being a good quality business partner, that means when we need favors, when we need phone calls returned, when we need things pushed through the system, if we need pricing incentives and that type of thing, we are the first person they call on that. And that just means a lot. All of these things come into play on how we are the best place for you to do business with, just because of all of these things. You know, our business, we were looking for business partners that share that vision, and we always look out for the best interest of the client. I have a story I won't go into today since we're taking up so much time, but maybe on some later call, I'll explain a little bit further in detail about doing the right thing by the client and what that means and how we've demonstrated that.
Go ahead, Frank. Go into it real quick. Whatever you want to say.
It is many, many years ago when I first met Peter. I worked with a lender out there that kind of had some things going on, and the market really got haywire. Rates went up, spiked up overnight. You know,
where you go with this?
And I've never seen anybody do this for no fault of Pete and Ability Mortgage Group. The lender that we were working with at the time just got so overwhelmed with business at that time, many, many, many years ago, that they couldn't handle it, and we were going past lock expiration dates. And you know, Pete wrote checks out of his own pocket because he did what he said he was going to do to close those loans. And there's not any other mortgage broker or person in the mortgage business that I'm aware of that goes to those links to make sure that we do the right thing by the client. So
$9,000. I remember the check. It still hurts. Just the cost of doing business. There was actually a couple of them. Big bottleneck. It reminds me back to the day I was doing 40-something loans myself. One other thing I want to talk about real quick, I know we're going a little bit later than we wanted to, is out of those couple deals that people, the agents reached out to us, and thank you, by the way, and we want to be your loan partner. But out of those couple deals, I believe that, and this is just, we push the envelope. If we send it to our best bank and our best bank says they don't like it for whatever reason, I'm pulling that file and it's going to bank B. That requires another appraisal if we can't get it transferred over or for speed. But I think I was in last week for $1,000 of this month for appraisals. Is that right, Craig? I dipped into my pocket just to get these things done in 8 days. Boom, out the door they went.
Yep.
But I think you reported back that just under $1,000 in appraisals. We are in the business of putting people into homes, getting deals done, and that stuff is below my radar and falls off my desk. It's just what we care about is getting the deal done within the contract time. And tell us a little bit about what happened with the appraisals, and then we'll go ahead and wrap it up.
Yeah, just real quick, we basically required a second appraisal, and we picked up the tab for that and paid for rush fees and that type of thing. So like Pete said, it's all in an effort of doing the right thing for our clients, the realtors, the buyers, the sellers, everybody involved with the transaction. Not many others would do that, but it was the right thing to do, and it's just another example of us doing the right thing.
All right, Reed.
Perfect. All right. Thanks, guys. Lots of great stuff here. Just stick around for the next episode when it comes out. Follow these guys on YouTube and all across social media where you can find all the videos. And until then, we'll talk to you guys next time. Thanks.
Thank you.